Cool beans. Welcome to the weekly wrap up. This is the fundamental and technical wrap up of this trading week. So looking back over the week, I told you guys from the beginning of the week that my eyes were on the daily fair value gap from March the 20th, yeah. I had it marked here, dropped it in the group chat, and told you guys to keep your eyes on those levels because that's where I saw price drawing to for Dixie. And so we did get up into that daily fair value gap. We see price pull back down into Friday's discount array on Tuesday, right? Beautifully pulled down into it here, right? And ran away from that discount price up into that daily fair value gap. So, I mean, you really can't get too much more clean cut than that. It was outlined what we were looking for. We seen price pull down into a PD array, which was the discount array for us this week. Just to, throw that fib on there from Friday's price action and throw your discount array levels on there. You can see Tuesday price came down into that discount array at the 62 level and ran away up into that daily fair value gap. And here Wednesday, we had a bullish day. So we expected price to pull back down into Wednesday's PD array, right? But price action did not pull back down into the PD array Wednesday like it did for us Tuesday when it pulled back down into Friday's PD array. It came close, but we didn't get that perfect retest like we did Tuesday. And price just went ahead and ran up into that daily fair value gap that we were looking. So with that being said, we know that our currency pairs inversely correlate with the dollar. And so we already know that we were expecting bearish moves out of currencies. For Euro USD, it was this daily fair value gap that we wanted to see price reach for, and it did reach for that, gave us that same perfect retest of Friday's PD array, in which for Euro USD, it was the premium array that we got. Whereas with Dixie, it was the discount array that price pulled back down into. So Tuesday, we got that pull up into Friday's premium array, and price ran away. And we hadn't seen price back in that area since. Same thing Wednesday was a down day when you mark your range. We expected that pull back up into that premium array, but price kept running, and we came down to run sell side liquidity from April the 3rd here, Thursday or yesterday, and then marking your yesterday daily range, you would be expecting to pull back up into that premium array. And I'm pretty sure that was a beautiful retest of the premium array, just looking at it with my eyes. But I'll throw it on there for you just so you can see. Yep. So pulled back up into that take that sell side liquidity off, making it look all jumbled. So yeah, today we pulled back up into yesterday's PD array beautifully. So I will be marking the daily ranges for price action today, and we will be looking to see how the market open up when they open up Sunday for the new trading week. Price action for metals this week were, and nothing to write home about. We did get the inverse move to the dollar to the downside. So we came down and filled in the rest of this fair value gap from March 30th for silver. And for gold, gold gave us a nice move to the downside, in line with its inverse correlation to the dollar. So we didn't get down into fill in the rest of this fair value gap though. So we'll see how price reacts to this market structure that we just broke through this week, and we'll see if we respect that structure, and if we do, then targets will be on sell side liquidity inside of this fair value gap from March 13th. Oil, not interested until we get above my levels. So moving on. Futures, E-mini, S&P 500. Friday we pulled back up into Monday we pulled back up into Friday's discount array. I mean premium array. Um, and then we pulled back down Tuesday. Um, and we kind of just consolidated in the beginning of the week. We didn't really get any confirmation on price action until Wednesday. And then we seen price action break this market structure, right? And so Wednesday, marking your daily range, you would of course been expecting ES to pull back down into Wednesday's discount array. We didn't. Price pulled back somewhat, but um, not enough to come back down and retest the discount arrays. Created this fair value gap for May the 17th for Wednesday's candle. And so yesterday was bullish as well. And we did not get a pull back down into today's discount array. So once price broke away Wednesday, it just kept running up. And I really wanted to see us push down more since dollar was bullish. I was wanting to see us pull down into this. However, once I seen price break away Wednesday, then my targets was set towards this buy side liquidity, of course, which was ran easily. And then my next targets was the next buy side liquidity, which was ran right here. And then we seen price start to break down today, right? We see this displacement in price, right? We break through this market structure. And so for me, that ended that bullishness that Wednesday price action started. And so we will have to wait and see how price action opens up for the new trading week. And that's pretty much across um, all futures, except for NASDAQ. NASDAQ just showed out this week. It didn't really give us any kind of, let me go to the daily. We look at Friday downward move, right? you would have been expecting us to pull back up into Friday's premium. We did push through it. We did not respect it, and price came back and used those same levels to run to the upside, and run to the upside. It did very aggressively. So I'm looking for some kind of correction out of futures next week. We seen us in today in a correction. So I'm going to be looking for us to at least pull back down into today's um discount rate for futures. And that's across yeah, we already pulled back down for Dow. So and came down and retested this breaker block. So we'll be it'll be interesting to see how price action opens up for the new trading week. Yeah, I want to see us pull back down at least to retest this discount array. And we could keep continue to the upside, but I would like to see us come down to at least retest yesterday's PD array. Yeah, to start out the new trading week. And then once we get down there, we'll see if price wants to continue to the upside or if we break through it and we want to come down and fill in this fair value gap that was created in Wednesday's price action. So last but not least, crypto. Um, Biddy looked like she want to come on back down and retest 25,250. So that's what I'm looking at. Unless we break back above this structure here, these two levels, then I'll be looking for us to run up into 30,000 again. Same thing with ETH. If we can't get back above this market structure, then I want to see us come on back down and retest 1700, in between 1700 and 1650. And for 8, I want to see us go ahead and push on up into this 420, 450 range. We should see that happen very soon. So yeah, that'll do it for the weekly wrap up for technicals. And I'll go ahead and pass it over to Carmen so she can go over the weekly wrap up for fundamentals. It's all yours, Carmen.
Cool. Hey, so this week was a pretty interesting week. And it was interesting for several different reasons. I am currently redoing my Forex Factory calendar, so give me a second. And I am going to share my screen. All right. So this week we had on Monday, Empire State Manufacturing news come out. Not good. Tuesday, we had for the US, and I'm just going over US news right now. Core and regular retail sales, not good. And these are the major news items, the items that typically get looked at or advertised the day before they come out as items for people to look at. Even though it's not highlighted as orange, crude oil inventories, in my opinion, should be. Yesterday we had unemployment claims. We also had Philly Fed news come out. We had existing home sales, and then today, even though we didn't really have anything technical as far as news items were concerned. We did have some Fed speeches, Janet Yellen, Christine Lagarde, and then G7 started today. So all of this stuff is starting to really matter and really come together as items of interest. So I'm going to go back to one particular item of interest because no one is talking about it, and I think it's funny. Crude oil inventory. So no one is really talking about Russia and Ukraine anymore. However, there was a piece of paper that was signed from the U.S. Department of Defense stating that they were going to give Ukraine all these F-16s. What I think is funny is that nobody's like, when I talk to you guys about cycles, I promise you, promise you that when you start to really look at charts and overlap stuff, you will see patterns. And they're not like, oh, like we don't really know. Like there's a reason why governments do things the way that they do them. There's a reason why everybody's trying to sell and protect assets now going into next year. Like if I could tell you all the stuff that overlaps between next year and 2025, like we'd be on this call all night. Now, this whole thing with these planes was done, it wasn't even done this year, but the delivery date is important. And it's a couple of things with the whole Russia Ukraine thing with energy people aren't talking about because while while you guys were hearing about sanctions, this got to put sanctions on Russia for that, little did they tell you that the United States cut themselves out of some of those sanctions. Why? Because Russia is the premier provider of nuclear materials. They don't want you to know that. They won't tell you that. But in order for us to get some of our energy, and in order for us to meet some of our demands on the energy front here in the United States, we need Russia. So you can't piss off Russia too much, but you can push it to the limit where it's like, look, we're not playing with you. But then Russia can bite back and say, well, whatever. So that's why a lot of times when you hear these conflicts going on and you're like, man, the US is backing down, they don't have a choice. When you get a certain amount of your energy demand from another country and then they don't need you, yeah. Now, what does that have to do with these planes? There is a cycle. So it's a long cycle. Most people, when you look at cycles, most people look at very short-term cycles, which they matter too. Like your short-term debt cycle, your long-term debt cycle, your intermediate-term debt cycle, real estate cycles, interest rate cycles, like all those cycles are very short compared to the conflict cycle. Look at the last time we had a real conflict. Like, I mean, missiles, boots on the ground, as Bush called it, conflict. Like, think about the last time we had one. Then think about the time before that when we had one, and then the time before that when we had one. It's pretty much like on a cycle, but it's rhythmic. It's time for us to have another one. Not only like there's too many things that are starting to happen now, and the dynamic is starting to shift and it's tipping out of the favor of the United States. So here's one thing you got to think about when it comes to conflict, physical conflict. You have to have, first of all, you have to have resources. You got to have troops. You got to have allies. The United States, comparatively speaking, has a lot of those things, but there's one thing that the US has that's lacking that you can't just make more of. Soldiers. What is Ukraine? Like we're sending all these planes, we're sending all this stuff to Ukraine. Great, they have stuff, but do they even have the people to use it? When you look at the size of their military compared to the size of Russia's, China's, our military, is small. They have more stuff than they can actually use. So you're sending stuff to Ukraine, essentially, in my mind, to be seized. This is just stuff that's going to get used by somebody else and it's just going to get taken away. To me, in my mind, it just doesn't make sense. However, what does that have to do with oil? So now you are sending out this fleet of planes. That fleet of planes in the United States or on our side has to be replaced. And then not only that, but that's an energy demand. Also, going into the summer, OPEC has already said, we're going to do what we want to do. Now you have all these smaller African nations that are starting to produce energy, and they're like, we're going to do what we want to do. There's a couple of solar panel companies in North Africa that are like sending out energy, which don't get me started on that, it's stupid, but they're sending energy to Europe. So Europe is trying to lessen their demand for oil. So to me, this whole saga with oil is going to get really funny and really interesting really fast, because it is going to get to the point where the US is not going to have any oil allies. All of the people that the United States currently consider, except for Canada, a couple of other, like a few, a very small few countries. Outside of those, these other countries are part of BRICS or are on the waiting list to be a part of BRICS, meaning they're trying to get away from the US dollar, which means that in essence, you're not really an ally if you don't really support our currency, which is kind of like the backbone of the country. So I think that's funny. Oil, I feel like will be one of the top 10 topics of G7, just because we are going into the summer. It's things that always gets talked about, because in Europe, their oil cycle is a lot shorter than ours because of their latitude. And depending on the longitude, it makes even more difference the further east you are. Sorry, the further west you are. So anyway, I want to see what's going to come out of G7 as far as that. Some of these other numbers, they're important. They're not like at the top of my list of things that I'm necessarily concerned about right now. Other things I'm concerned about, Janet Yellen in her speech today, she was just like very critical of the banking system. And between Janet Yellen and Jerome Powell said that he was not, and they did not have any intentions of lowering rates this year. So that kind of threw some ice onto the markets, because the markets were hoping that even if we hit recession later this year, that the Fed was going to decrease rates, and they said no, flat out no, which in my opinion, not really a bad thing when you look at it in the past. Typically the Fed has lowered rates too soon and has just caused more problems. So sometimes you really do have to stress and somewhat break the system in order to kind of fix it. So I feel like that's where we are now with the Fed. And then a couple of other things I wanted to tell you guys about, and then I'll be done. Oh, crypto. So Bitcoin halvings estimated to be next April. So pay attention to that. Today is the third Friday. So options ended today. So it wasn't a surprise to me to see markets kind of sell off the way they did in the run up to today. Just a ton of profit taking. And actually the profit taking today was kind of interesting because a lot of people exercise their options. So typically, most people just take their profits. You find people that exercise options, but you really got to have money. Like if I buy an options contract and I let it exercise, and here I am footing the, I don't want to say footing the bill, but it's kind of like what it is for like 100 shares of that stock. So you gotta you gotta be ready if you let your like actually roll over into shares. And a lot of people did that today. So I found that interesting. It could be a tax move. It could be just holding their shares and stuff that was of value. But I found that on the retail front, a lot of people sold shares. And I guess people sold shares because the market ran up for the last 2.5 days or so. So people were doing a lot of profit taking. But speaking of profit taking and just money that people have, so I looked at the personal savings rate for the US, and right now it's at about 4%, and usually it's at about 9 to 10%. Um, and another interesting fact is that Black Americans only have about 3 to 5 days of liquid savings, whereas like white Americans have about 30 to 45 days of liquid savings. Meaning like if someone said, I need for you to get me XYZ like in 24 hours, you wouldn't, like you could go and get it, or you have the physical cash to do it. Like if anything that you had to um well, first of all, if you had to sell anything, that's not liquid. This is just straight up going to get it out of the bank, going to get it out of the ATM, you pulling it from somewhere. Um, most like Black Americans only have 3 to 5 days worth of cash or liquid savings hanging around. So the markets are a good place to invest your money. Obviously, this week kind of showed that if you are long term, if you're a short term day trader, then you have to find a way to be long term. My mentor always says to be long term and then go short term, because your long term money is always going to be there working for you in the background, just because your rate of return on a day to day basis is going to be so short. But you trade how you want to. It's your money, it's your life. You know what works best for you. But what I can say is that I had a pretty good week. I didn't even pick up my phone to place a trade this week. I just picked up and looked at long-term accounts this week. So long-term trading is definitely valuable and it's an asset. And I would recommend everybody at least look into it if you haven't already. And I'm done. I'll turn it over to Mr. Levels.
Cool beans, cool beans. Thank you for that saucy fundamental session as always, Carmen. At this time, I'll stop the recording and take any questions.